Are you browsing through stocks but don't know what one to invest in? Stay tuned to see what to look for when investing in a stock.
Why you not here with me? Can you break bread with me? Why you switch phones? I was like, oh,
How's it going, guys? Ryan here, and welcome to another stock market basics tutorial where I show you what to look for when you're deciding whether or not to invest in a stock. Knowing what to look for in a stock when deciding whether to invest in it or not is ultimately going to determine whether you're going to be a successful investor or a failure of an investor. There are a few key areas that you need to look at when deciding whether or not to invest in a stock, and I'm going to share those with you now. Coming in number one, what does the company do? You need to understand the market the company currently exists in. Is it volatile? What stage is the company at in their life cycle? Are they just a small company coming onto the market, or are they an established company with a steady stream of income? You need to understand how's that company making money, and in particular, how's it performing against its competitors. Are we consistently seeing profits coming in through their product they're selling, their service they're providing, or are there other people out there doing better than them? One key element to look for is, does this company have a competitive advantage against everyone else in the market? And if they do, is it going to significantly benefit them when comparing them in the future? A company that is innovative, for instance, is likely going to succeed in the future because they're going to continue to grow and develop, as opposed to one that is stagnant and stuck in the past and is relying on their existing customer base rather than expanding and introducing new products or services into their suite. Moving on to number two, you want to look at evaluating the financial health of a company. So the first thing you do is you go to the company's website and you download their latest quarterly or annual report to understand the finances of the business. First things first, you want to go to the balance sheet and quickly determine whether the company is making a profit or it's making a loss. Obviously, you don't want to invest in a company that is losing money. You want to invest in one that is going to make a return on your investment. You also need to determine how much debt the company currently has. If they have a large amount of debt, that needs to get paid off before the company can start making any real money. Now, it's worth noting that debt isn't necessarily a bad thing, particularly for small companies that aren't well established, because you need those initial funds to get yourself going and off the ground. But when you're looking at a larger company that is using debt as a means to survive and to pay off their staff, pay off suppliers because they can't afford it, that's when debt is going to be a bad signal for you. You want to then be able to identify any future expenses coming in. So are they looking at taking more debt? Are costs going to increase? Or alternatively, is the expenses going to decrease, in which case it's likely they'll make a better profit margin. You want to also see if they're predicting that they're going to make a larger profit in the next quarter as opposed to the one just prior, because that shows that the company is actually in fact growing. Lastly, you want to look at the cash balance of the organization. This is really fundamental in determining whether the company has funds. If something goes bad, they'll need to be able to draw on those funds in order to stay afloat. Otherwise, they'll need to take on debt. Having a healthy cash balance also allows them to pay dividends to people, as well as make further investments or acquisitions to expand their company. Moving on to number three, you want to see if the company has any future potential. Is it clear that this company is going to grow in the future? Can you foresee there being demand moving forward? A perfect example of this would be a company such as Tesla, which has seen extremely consistent growth over the past few years due to the fact that electric vehicles are the new big thing and the market is changing. It's clear to see that there is an appetite for something like electric vehicles due to the fact that there is a focus on carbon emissions and climate change. Another example would be a company such as Apple, who has quite a large cult following and is constantly innovating and bringing out new products that their client base is buying. You want to go onto the company's website and determine if they have a clear vision or a roadmap in place that outlines the plans for future tasks, future activities, future projects, because that's really going to identify whether or not there is growth. You want to also determine whether or not in the past that the targets they have previously set, they have hit and it's been well received by the market, because that will confirm that potential goals they're going to hit in the future will result in an increase in the value of the company and as a result the share price. Another key area to look at is the current market cap of the company. So for instance, if a company is producing $5 million worth of profit every year, but it's only valued at $3 million, well, you can clearly see the company's undervalued because it's worth a lot more than what it's currently sitting at. So as a result, you want to be able to target that company and say, hey, this definitely has the potential for the share price to grow in the future, particularly in the short term if the market catches onto it. A good way to look at this is through going through company reports and determining what is their current earning and what is their future earnings potential. If their future earnings potential is significantly higher, then of course the company should be worth more in the future and as a result is likely to grow. Coming in last is you need to look at the technical information currently at play. You need to move away from the fundamentals for 1 second and understand what is the current market situation when it comes to technical analysis of the stock. The first thing to look for is the share currently in an uptrend or a downtrend? If the company has been in a long-term downtrend, then it's likely this is going to continue unless resistance is broken. Alternatively, if the company's been in a consistent uptrend, it is likely to keep growing as long as it stays within its parameters. You're able to use these sort of trends as well as other signals such as moving averages to determine good spots to buy in. So for instance, if you've got an uptrend and you can see it's bouncing off the bars either side, so you've got your bars like that and you've got your price bouncing upwards in between them. As soon as it hits that bottom bar, essentially what you want to do is buy the stock and then it's going to bounce higher. Now you can even trade this stock then by selling it when it hits the top of the bar, or you can continue to see profits through consistent increases in the share price. Another key thing to look for is how many shares are currently on issue and how many of those shares are held by the top 20 investors. If you've got lots of shares on issue, then generally it's pretty liquid and anyone can sort of get in there and buy the stocks. It's unlikely to increase in value significantly, just purely due to the fact that there is so many shares available for people to buy. Alternatively, if there is a limited amount of shares on the market, that means if someone wants to buy the stocks, they're more likely having to pay a higher price and put their money on the line in order to get in, due to the fact that there is less supply available but with a higher amount of demand. Now, if the top 20 shareholders hold a relatively large chunk of the organization, let's say 50 to 60% ideally, that means the price is less likely to be volatile and it's going to remain pretty stable because a large chunk of the shares on issue is currently sitting with a very limited number of people. As a result of this, for everyone else on the open market, there are less shares available to buy, and as a result, naturally, the price will rise as demand increases. Now, you need to make sure that all the areas I've spoken about today, you research and analyze, put them together. Obviously, every company and every market is significantly different, and as a result, you really need to have a holistic view of the company. I hope you guys enjoyed my stock market basics tutorial for today. If you did, remember to leave a like and comment any questions down below and subscribe for more content. Hope you guys have an awesome day. Happy trading. Cheers.
die here